Stefan with the Cash for Gold store. And today we'll be talking about buying gold and the best way to buy gold and invest in gold for your safety, security, and for your future. As many of you know, gold has gone up from about $250 an ounce to over $1,200 an ounce in the last 5 years alone. The last time it made such a huge jump was in the 70s when the US dollar was taken off the gold standard. It went from approximately $35 an ounce to $750 an ounce. In today's money, that would be over $2,000. Now, due to the global economy, the U.S. deficit, inflation, the amount of money that's in circulation, many people feel that gold is more valuable than the $1,200 that it's trading for right now and expect it to go much, much higher. As a result, many companies have taken advantage of that and they're selling people gold. So, what is the best way to invest in gold? There's different types of investments. There's paper assets. You can invest in gold by buying physical gold. You can even buy numismatics. So, each strategy has its advantages and disadvantages. For example, companies that promote a lot on buying gold or selling you gold, they focus on mostly numismatics. Numismatics are coins that have additional value because of prestige, because they're old. They have value that is above and beyond the value of the gold within it. Okay, the number one problem with numismatics is the markup. A lot of times numismatics have huge markups, sometimes as much as 100%, which means that your gold is going to have to go up 100% in order for you to break even. Okay, this article here, the Phoenix New Times, they covered exactly that. They call it soaring prices, unscrupulous precious metals dealers, and right-wing propaganda. So, in some circles, they're preaching this idea that the economy is going to collapse and that people need gold as a safe haven, and as a result, many people are rushing towards buying numismatics. The problem with just selling people straight bullion is that bullion dealers only make about a 5% commission. It's the only spread. If you bought $1,000 worth of gold, the dealer's going to make only $50, and that type of profit is nowhere near enough to cover the expenses of, for example, sending you a booklet like this, which alone costs about $5. Then the shipping is about another $5. Here you can see that this is one of the very common things that they tell you about when you buy gold, and it's on May 31st, 1933. The United States seized all the gold that was privately held by people. They included jewelry, they included coins, they included everything, bullion. It's called the Gold Seizure Act of 1933. Many people refer back to that date, and the only gold that was allowed during that time was the numismatics. So if you wanted to have gold, you wanted to have the numismatics. The problem I find with this type of thinking is that if we ever get to a point where the government wants to seize all the gold, that means that the gold has inflated to such a high price already that if you've already invested in gold, for example, bullion or bullion coins, you've already made your money. So even if it gets to that point, you already made your money on it, and you can invest it in other assets that are undervalued, for example, real estate or even paper assets at that time. The other tool that people use is ETFs, which are paper assets of gold, or buying gold mining stocks. Now, the problem with buying mining stocks is that there's many other components that really go into it. For example, just because a company's mining gold doesn't mean that their operations are very good. It doesn't mean that they're efficient. It doesn't mean that they're effective. It doesn't mean that they're good at their job. It also doesn't mean that their accounting is good. So you can have a company that is mining gold and not making as much profit as another company that's mining gold, or maybe their stock is not keeping up with the increases in gold as you would, and you're not making as much money as you would like off of that. The other very common way of buying gold is ETFs. ETFs are a paper asset which is tied to gold, but it's not 100% tied to gold. A lot of times companies buy these ETFs, which are paper assets, which are pretty much saying we have gold. It has been shown in the past that at times they didn't have that gold to back up the paper asset, and as a result, the paper asset wasn't worth anything. It was just a piece of paper, kind of like a dollar bill. We feel that the flaw of the paper asset is that it's not directly connected to gold. In fact, when you go to invest in ETFs, they outline that for you in the contracts. They say that just because gold goes up, it does not mean that your gold ETF is going to go up. As a result, I don't feel as confident with that paper as a strategy. The last way is to actually buy gold, physical gold, silver, bullion. You can buy platinum too if you wanted to. And you're going to get bars or you're going to get coins. Between the two, we recommend coins. Coins have several distinct advantages. For example, they're very liquid. People know what they're worth. They can kind of get the face value of it. And in tough economical times, historically, golds have done very well as a barter tool. And they're, as I said, very, very liquid. A lot of times people make the argument of how you're going to get rid of your gold without realizing that gold is one of the most liquid assets you could own. The only issue with buying bullion is storage. A lot of times people are going to say, well, how are you going to store it? Are you going to have it in your living room? Are you going to have it under your mattress? There's many ways you can do it. You can put your gold in a Brinks secured center. And basically what they do is they guarantee it. They conclude how much gold you have. They put it in their vaults. If you ever wanted to liquidate what you have, all you have to do is just give them a call, and they'll deposit the funds into your account. You don't even have to go there in person. Okay, and some of them are open 24/7, so you don't have to worry about it, closing down and you needing money on a Saturday or a Sunday. The other thing people think about doing is putting in safety deposit boxes. That may sound like a good idea when in fact it's not. Safety deposit boxes are not guaranteed. If a tornado hypothetically came out and wiped out your bank, you would not get reimbursed for the gold that you lost or you had in your safety deposit boxes. Moreover, if something occurred and the bank moved or went out of business or was closed that day, you would not have access to what you had in your safety deposit box. There is no insurance on those boxes, and it's a risk. Even though it's a small risk, it's up to you if you want to take that risk. Now, lastly, a lot of companies, like for example the Cash for Gold store, we sell gold bullion. We pretty much specialize in bullion sales. Okay, we can also sell you numismatics if that's what you want to do. That's really the direction, and you have your heart set on that. But we prefer to guide you in that direction, in the direction that we feel is best for our investors. Our commissions are very low; they're only 5%. If you do more than the minimum order, you may qualify for free shipping. Okay, and the other way is we can store your gold for you. If you ever wanted to liquidate it, it's pretty much an instantaneous process. So if you want to contact us regarding this, you can call us directly or go and visit us online at cashforgoldstore.com. You can also call any of our branches and place your order. Our orders are usually processed instantaneously once upon receiving payment, and your gold arrives 3 to 5 business days after your payment is cleared. So you can also follow us more online. We're on Twitter, we're on YouTube, and we hope to hear from you soon. This has been brought to you by the Cash for Gold store, and thank you for watching this video.